What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is January 4th, 2022, second trading day of the new year. So we've seen some crazy action in the first 2 days. Today we're going to talk about the price action, the indices, and we're going to talk about this rotation that we're seeing from growth stocks to value stocks, how violent that rotation is. And we're also going to talk about, treasury yields, the impacts that could be having. Before we dive into that, quick first disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. Last but certainly not least, do not YOLO your entire account to any one of my trades. All right, with that being said, let's dive in. We have a lot to talk about tonight. Let's check it out. So let's look first at our headline indices. And what's very interesting is, there's this theory of the January effect where, maybe some of the stocks that did poorly in Q4, we'll see a rotation into them in Q1 of 2022. As of now, we're seeing no evidence of that. Let's take a look at these box scores and you'll see what I mean. S&P 500 is measured by the SPY, closed down 0.03%. So basically a flat day for the S&P 500, nothing too crazy. Volatility picked up slightly, and we actually had very good breadth. The S&P 500 at 67% advancers. The Nasdaq QQQ really struggled today, down 1.3%. It was down as much as almost 2% intraday at one point. And you can see the volatility increased pretty significantly on that one. Really bad breadth on the Nasdaq. IWM down just a smidge, down 0.15%. Dow Jones up 0.6%. So that's a little divergence there. The Dow Jones actually leading. And then this ARK Innovation ETF was down 4.43%. So really bad day for growth stocks. And this is really, second day of the year, second bad day for growth stocks. I think there's a lot of growth investors out there that, are pretty much panicking today. I think today is one of those days where the risk really manifests and everybody's like, what is going on? And trying to figure it out. So we'll talk about, maybe some of the drivers. In terms of ranges, what's interesting is we closed in the lower half of the day's range for all these indices, but even the ARK Innovation ETF closed well off the lows, about a third of the way through its daily range. And what's also interesting is the Dow Jones, that was the best performer today, had the worst closing range. So that's actually pretty interesting, and it might showcase the fact that, maybe this rotation into value is a little bit overdone. What I noticed was I started seeing some overbought signals in the value stocks, oversold signals in the growth stocks, but we'll go ahead and talk about that in more detail. But yeah, mixed bag, and it was pretty much, a tale of two tapes with some haves and have-nots. Finviz heat map, you'll see that demonstrated right here. We had pretty much all of these FANG stocks with pretty big declines. This software group really got hit. Healthcare as well, which investors have been rotating into in Q4. All these really got hit. And then you can see energy did very well. Financials did very well. Also, I'm long some XLF calls. And that is something that one of our members called out, the XLF the other day, and I picked up those calls. So yeah, it's great when you're trading in a community. People are sharing ideas. There might be things that, maybe you were like, hey, the financials could be a good group. Somebody brings it up and boom, jogs an idea for you. So yeah, definitely a mixed bag. Let's take a look at our sectors and you'll see more of the same. So energy is now our number 2 sector in terms of momentum, up 3.46%. Aerospace and defense up big. Regional banks up big. So this is a character shift in the market. So into the end of the year, we saw it was consumer staples, which are still at the top, utilities, real estate, basically just everyone getting to safe havens. And in the beginning of the year, it's what are investors going to rotate into? And we can see they're rotating into these more cyclical groups. You can see financials working its way up the list as well. And then what are investors rotating out of? Well, today was a pretty violent rotation out of Chinese internets, the ARK ETFs, solar stocks, software. So look at this. Now software is one of our worst groups in terms of momentum. So yeah, all these more speculative areas of the market really getting hit. And, this is definitely preparation for the Fed to end some of their stimulus. I also think the psychology that's flowing through the market right now is investors are realizing this Omicron variant, it could mean the end of the pandemic as we know it. I've seen a couple things come out, some Wall Street banks saying, hey, Omicron, it is indeed a lot less deadly than some of these other variants. And if you think about that, okay, everyone's getting Omicron, but it's less deadly. And suddenly you can start thinking about like a reopening, industrials, airlines, things of that nature. And against that backdrop, we're going to see these software names that were safe havens during the pandemic underperform a bit. So that's exactly what we saw. Definitely a tale of two tapes. I think what's super important is, to just not panic. If you have some growth stocks, depending on if you know what you own, if you're just kind of like, I invested in this stock, it was super hot. I loved it when it was at $200. Now it's at 100. I have no idea what they do and I hate it. That's where you're sort of in trouble. But so long as you're being selective, it's okay if you own some growth stocks and they were down today. They were all, down pretty big. Style factors. High div, low vol, up 0.86%. Best performers, we had high beta up 0.99%, pretty good. Value up 0.88%, and this international value was up as well. And then the big losers, growth and momentum, down 1.04% and 0.35% respectively. Seasonality, we're in the heart of some very good seasonality at the very beginning of the year. Let's take a look at some of the carnage in these growth stocks. First, let's check out our indices. So the technical pattern in the S&P 500, we had a really nice run up, still just more consolidation. And what's good is this 20-day moving average, slowly but surely it's catching up to price. So that is a good thing. A consolidation is nice and healthy. One thing that's interesting is since New Year started, we are getting heavier volume here. And if we look at the hourly chart, you can see we are still in value. We actually tested the outside of this weekly value area. We were outside of the weekly value where it fell back in. And then now we're just kind of in no man's land for the S&P 500. Let's take a look at our Nasdaq. And with the Nasdaq, we'll pull up our bond yields. Nasdaq pulled back to the 20-day simple moving average. So we're below this monthly value area. But pullbacks to the 20-day simple moving average, they are such a normal part of the market. It's pretty crazy that... My Alexa's talking to me. Alexa, stop. Pretty much every time the market gets extended from this 20-day moving average, no matter what index it is, it's like nobody thinks it can go down, and then when it pulls back to the 20, that's when everyone really panics. But this pink line, this 20-day, the market regularly interacts with it. See, it's it's not like the end of the world or anything like that, but definitely being inside of value, that's noteworthy and a change in trend. So it's just showing that, hey, the Nasdaq is not the most desirable group, at least in these first couple days of 2021. And let's pull up our treasury yields. We had a bunch of questions about this in our community today. So with these treasury yields, basically what happens is as yields come in and you have, let's say like the 10-year treasury yield is 1%, and that's what happened during COVID. These yields really came in. Then suddenly these growth stocks become super attractive. They have cash flows that are going to be coming in the distant future. The discount rate you're using to discount those cash flows is very low. So suddenly it becomes attractive to buy those growth stocks. As treasury yields start to blow out and these treasury futures start to break down, that's suddenly where the discount rates to discount these cash flows start rising. And so the companies that have no earnings, or the companies that maybe now they don't have much in cash flows, but we're anticipating in the future they're going to have big cash flows, those are the companies that are most impacted. So now, look at where we're sitting. So, huge red day in these treasuries yesterday. And it's super interesting, sometimes it's like the stock market's like waiting for like a critical level to be hit. Then all of a sudden the growth stocks sell off like that. Today we had some follow through. But what's interesting is we have this S1 pivot. It's a pivot away from this monthly value area. And it looks like we found support at it. We did not close on the lows in treasuries. Some buyers stepped in, but we are going to have to see. We have this low down here that we made in late November. And could we end up breaking down below it? It's certainly possible. Let's take a look. Yeah, and you can see, some weakness on this weekly chart. We're below this 200-week moving average. Yeah, we still have this reference point down here. And what actually pushed us off these lows the last time? Really what pushed us off was the market saying, oh, Omicron is here. We could have lockdowns again. That pushed these bond yields back in check. So maybe we need another COVID variant and these bond yields will come back in. We'll have to see. One other dynamic, flipping back to these indices, we'll go over to the Russell now. My trend model, it was being wishy-washy today, flipping back and forth from a +3 to a +1. That's the first time in quite a while, maybe in the past couple weeks, where my trend model has flipped around a little bit. Ended up closing at a +3 though. I was pretty prepared to de-risk a little bit if my trend model had flipped. As of right now, we're still looking okay. All right, Russell 2000. This is just not really in the best trend, I'll be perfectly honest. We're having a tough time getting above this 50-day moving average. For that reason, I'm trying not to focus too much on it. And then the Dow Jones. Dow Jones, this index is more so synonymous with value stocks, old economy stocks. It has a bunch of the banks in it. And for that reason, the Dow Jones is outperforming right now. And the Dow Jones is really like moving out ahead of the S&P 500, the Nasdaq. So yeah, this is where the money in the market's currently flowing. So if you're a trend trader, you want to make sure you're incorporating at least some of these names, into your watch list, into your process, and not just focusing on growth stocks exclusively. Let's take a look. We'll pull up some of my trades for today. And really, actually, before we do that, let's go into some of these stocks that are just getting the work. So Cloudflare, down 8.88%, pulled down to this Venom S1 pivot. Let's actually look at the granddaddy, the ARK Innovation ETF. So it's noteworthy. Huge red day for the ARK Innovation ETF, right? But we did not make a lower low today. So I drew this little crude trend line here. Here we made a low, and here we made a higher low, and here we just made another higher low. It's not to say tomorrow we won't just like pierce through and actually break down, but it's interesting that I see like a lot of hysteria with growth investors. And oh my gosh, this is horrible. This has been a horrible trend for these growth stocks. But today it's just like, huge volume, but there were some buyers that came in, started picking the carcass on these growth stocks. Some of these other names, Cloudflare, just went over this one, broke down below the 200-day moving average. So that's pretty huge. This company Cloudflare, it was trading at a ridiculous valuation. And it's still trading at, now it's 63 times sales. So still an exorbitant valuation. Not quite as bad as up here when it was at like 120. Let's see, Asana. Asana's actually not looking as bad. It's not like plummeting to new lows. Still looks horrible though. What else do we have? A couple of the names that I'm in, like this GLBE, I have a starter position on in this one. This one got sparked, worse than most of these. It was down 13.16%. And I might end up stopping out of this one tomorrow. I have a pretty small starter here. Thought I was going to be able to build a position, but it's just not really showing any relative strength. And I want to start navigating away from these that are not showing that strength. One thing that's noteworthy though is we held this bottom of value. If we look at the weekly chart, it didn't make a new low today. That's a good thing for sentiment. Like today, I think there's a lot of panic in these growth stocks. But if you see people panicking, but they didn't actually make a new low, that's often when it's like, oh, okay, maybe it's an overreaction. To be honest, it looks like some hedge fund literally just like rolled over and died today that owned a lot of these growth companies. So yeah, GLBE, definitely catching the brunt of this. Yeah, a lot of these stocks like Unity. I cut this one yesterday. I took a stop. This one was down 6.43%. DigitalOcean. This one I also have a position in. Take a look at this. DigitalOcean, pick this one up towards the lows here. But yeah, it's not just like zooming back up to the highs. This one also held the bottom of value. So the flip side of today is these value stocks perform very well. So over the past couple days, I've been barbelling into some value stocks as well. So today, so long as you had some value stocks in addition, today wasn't so bad of a day. It's really just like, hey, half my portfolio's ripping, the other half is dipping. So Ford, I entered a position on this one yesterday, pretty close to the open. It was interesting. Yesterday when I was in Ford, I was like, man, I took Ford instead of Tesla, but Tesla really, stole the show. Tesla ended up pulling back today, and Ford just, ripped out to new highs. This stock up 11.67%. And it just goes to show when you buy these stocks as they're coming out of the base, and as that supply is drying up, this is one of our weekend watch list setups for Pristine Capital members. That's really where you can get an explosive move very quickly. See, and Ford, just really nice move today on very high volume. If somebody is not currently in Ford, is this where I'll be saying go ahead and buy it? Absolutely not. And I think that's the problem with most investors, or a lot of maybe like price action investors that are kind of on the newer side. They'll wait until it's super extended like this, and then they'll go ahead and buy. But you always want to make sure the risk reward is in your favor. Ford looked really good. Let's take a look here. I'm going to pull up, what did I trade today? I think I did very little in trading. I think I only bought some Expedia. Let me see. Okay, I did actually do one options trade. I closed out the SPY puts that I added yesterday. So let's pull this up. So we've got some stock trades. Got options trades. Yeah, I kept it pretty light today. So yeah, Expedia. Enter this one for the breakout. And I put it on in 2 executions just in case it dipped. Take a look at Expedia. So this was not really the reaction I was looking for. This one, Expedia. So it attempted to break out, but it looks like that breakout attempt was pretty much stuffed by the market. So I'm looking at this one, and the weekly chart looks great. So you can see we're getting very close to a breakout on the weekly chart. A lot of times what I notice is the best setups are when you get a breakout on the weekly chart from a very long base. And this one, didn't quite make it. It squatted, but that's okay. So yeah, added that one on. I'll give it a little bit of leash. See if maybe it was just due to the overall market weakness, what might have you. Let's see, Expedia. And then the only other trade that I did today was I closed out the SPY puts I had for the tiniest winner, essentially a scratch. And I closed these out, but not seeing a big move in the VVIX to make me think this is a real market sell-off. Seems like a big rotation. And sure enough, the SPY ended up just popping up later in the session. So yeah, it might seem like the market's selling off, but yeah, the market's just consolidating. So yeah, it's consolidating, and we're seeing some big rotation. Let's actually take a look at our squeeze metrics here and see what the dark index looks like. And take a look at this. So the dark index, it's at a 43.1. Really what that's showing me is it's not like we're getting that dark index buy signal, but we're not seeing a sell signal either, pretty neutral. So let's see if we got that. Let's take a look at our options order flow for today. Let's see what was going on. So with this tale of 2 tapes, there might be some insights we can glean from this options market. So let's pull up first and foremost our options race via VigTech. Let's see how much flow we got. Yeah, look at that, JPM. So that's another theme, financials. Really nice move for those stocks today. I'm currently long some financials calls. Tesla, wow, 4.7 billion of flow. That's pretty up there. JP Morgan, 2 billion of flow. So that's huge. We got the SPY. And a lot of our usual offenders. Ford, some big flow today as well. Let's check these out. And let's pull up first JP Morgan. Let's go through this. Go through pretty quick. Yeah, JP Morgan. Wow, really nice move. Look at that huge gap. Nice volume. And then got really good follow through. So look how quickly this stock, you know, the chart looks horrible. And all of a sudden it's like, wow, we're pretty much trading right back to the highs again. Pretty remarkable how that can happen. And this, you know, financials ETF entered this one long yesterday. And this one really blasted off. Very nice move. The financials ETF trading right up to the highs. So that's the thing, like if these treasury yields keep moving to the upside, you know, the growth stocks are going to be hurt, but these financial stocks, you know, they stand to benefit. So long as you have some form of diversification, you know, you're pretty much fine. Yeah, because there's other groups that are doing very well while these growth stocks are selling off. Let's take a look at some of these others. Big Tech, AMD, some decent flow here. Let's take a look at AMD. This is probably sold off today. Yeah, down 3.87%. Nvidia, I know a lot of people in our community were watching this one today. A mix of puts and calls. Let's see some March 300s. Let's see. Yeah, a lot of short-term stuff. In Nvidia. Ford, this was the big winner today. A lot of calls going up for February 24 calls. January 7th, 24, so very short term as well. Was this a gamma squeeze? Probably. March 25s. What level did it close out? Is it at 25? Yeah, 24.31. So I'll likely take a target on my Ford tomorrow. Let's see what else we had. Alibaba. So this is very interesting. I have some Alibaba calls. They're about like 70%. Took some targets earlier on this trade. But look at this. So a mix of puts and calls, but we're actually seeing more call flow now, which is a good thing. This is also super short term though. I see some February 130s. But Alibaba looked like it was on the canvas for 90% of the trading day. And then it popped back and just put in a doji candle. Let's actually look at that over here. So it held the bottom of value. Pretty good. Put in a doji. This is not bad. And there's a relatively thin monthly value risk. So I don't think people realize, like Alibaba, if it moves through, then it's game on. Let's check out. Let's look at the 5-minute chart. So look at this. So this is pretty much the majority of the session. So move down, hit these, what looks like, you know, in hindsight, capitulation lows at around 11 o'clock. Then we moved off the lows. We based from about lunch to pretty much 3 o'clock. You know, this looks like 2:55. And then at about 2:50, 2:55, just a burst of buying, a big green candle. And then from there, you know, we got a nice recovery in the stock. So yeah, late buyer coming into Alibaba. All right, let's take a look. We'll check out one more. So that was Alibaba. And then last but not least, let's look at, already looked at JPM. We got a Firm, Apple. So let's take a look at this actually. So, oh, Disney. All calls going up for Disney. Gotta keep watching Disney. April calls at the 155 strike. April at the 150 strike. Oh my gosh, June 150s. Whew, we gotta keep watching this. Disney. Yeah, so today the rally was stuffed. Gotta keep watching though. The candle looks very similar to Expedia's. With that being said, that about does it for this market recap video. You know, keep watching those treasury yields. Make sure you have, you know, if you're in 100% growth, I could see how that would be, you know, pretty nerve-wracking. But yeah, it looks like these growth stocks could be a bit oversold. So I'm gonna be looking to see if we get that bounce tomorrow. Hope you all have an awesome rest of your evening. I'll see you all for tomorrow's video.